Okay, very good morning. Wednesday, 25th of April. Hope you are well, and give you a quick overview. Things to discuss are the kind of negative finish that we had on Wall Street, consequently followed through in Asia. So the reasons for that yesterday being predominantly earnings led. So we'll have a bit of a review of that, because definitely we need to be keeping an eye on earnings again today. Then a few other headlines to be aware of, and then I'll hand you over to Sam, who I know has already been putting a few trade ideas into the chat room, but I'll get him to come on the mic and give you a full overview. But looking at the charts this morning, I think that's the main thing if you're a UK European trader coming in, is looking at the continuation of the sell-off that we saw from yesterday on the equity market. I mean, I'm just trying to see if I can get that Finvis heat map up, and kind of here it is. And check out Google. We're not talking about a small firm here, we're talking about one of the biggest companies on the planet. And they were down nearly 5%. It's a pretty large move. You'll remember their earnings came out the night before, and it was kind of their revenues were up, but their margins are kind of getting a little bit squeezed in that sense. So it was really the Nasdaq which saw the bulk of the initial selling. There were some other weak spots as well. Coca-Cola, I remember, was an earnings report. There were 3M also as well. So one of the things to be aware of here, and one of the things I just wanted to jump in straight away with, is how do you make your assessment of what's going to be the influential driver or the catalyst for market sentiment for that given day. One of the first things, I guess I'll just walk you through the process that I generally follow in the morning, is I look at all of the charts as I come in. I've already kind of gone through the news and research on my way in, kind of just recap things as I turn on my screens. But overall, I guess you kind of look at the daily economic calendar, and you're making a bit of a judgment call over what are the main events that are scheduled for today, and then layering on top of that, what are the macro events and how important are they at this specific point in time. And so you're trying to weigh up a combination of where is it the market's going to derive its direction from. And so, for instance, if I look at today's calendar, if I go through the economic data section first, I can see here there is absolutely nothing of significance coming out of Europe from a data perspective. You've got a Turkish interest rate decision, but for most of you guys out there, that's kind of irrelevant for the assets that you're trading. And in the afternoon, there's nothing coming out of the US apart from that kind of flash of course, market volatility that you usually see with the oil inventory data. So other than the oil release, there's really not a lot going on today. So then I turn my attention next to speakers. Well, who's speaking? Is there anyone I need to be aware of in terms of formulating a strategy? Because when you guys come in, obviously, as you trade day after day after day, you've got a pretty good feel for where we are at major technical levels. It's about reassessing that when you come in. But then also, it's not just about looking at the technicals thinking, well, that's a good level to get in and to risk manage the trade and appropriate target. It's about what are the other external risks to that trade. So let's say the euro currency, for example. Is there any ECB speaker I need to be aware of that can have a meaningful impact that could alter then the validity of that trade strategy? So this is your fundamental analysis now to supplement your technical assessment. So when you look at that, I look at the calendar here, you can see there's a cluster of ECB speakers. Okay, fine, that's got my interest. Villeroy, Klaus Knott, Lane, all speaking, got a bit of variety of different views between hawks and doves. They're all speaking seemingly at the same event. So the next thing I ask myself is, well, what event is this that they're speaking at? It's a non-bank finance trends and challenges specifically in France. So this is then lowered down the kind of pecking order of how important that my initial thinking is that this event could be. The other thing that's very important, of course, is you've got the ECB meeting coming up. And so with that in mind, then are they going to say anything this close to the meeting? I would say, they're well too versed to make that kind of mistake or to lay those kinds of hints, because ultimately, I'm not expecting a great deal from the ECB, but it's really Draghi's skill and his ability to communicate, where he's going to be doing that in the press conference. So overall then, I would look at the speakers in full assessment and say nothing out of this European batch of speakers makes me worried. Then you've got Bank of Canada's Poloz, who of course is the governor, participating in the Senate Standing Committee on Banking and Trade and Finance. That could be interesting, but this is for CAD traders, and if you look at the time, this is not coming until 9:15 in the evening. So again, it's kind of off of the agenda. So no one in the speakers, and really nothing on the economic data slate, is standing out that I think could really spark market direction. So then, given what happened yesterday, which as we were discussing, we've got, I think it's 13 of the Dow Jones Industrial Average components of obviously the 30 companies reporting just this week. Yesterday, you had a cumulative 23.5% of the entire index reporting. Now, that's what was quite key to the kind of trigger point for the equity sell-off. And the reason why that was relevant yesterday and why it was relevant, why it could well be relevant again today, is because of this lack of other interesting or high-level events that are ongoing at the moment. If you think about Syria, Russia, if you think about things like Saudi, Iran, if you think about things like trade wars, all of this has de-escalated substantially and is off of the agenda. That in combination with the light calendar makes me think, well, maybe these earnings might get a bit of a look in, and maybe from a behavioral point of view, given the impact that they had yesterday, investors, certainly intraday traders, will be looking probably at these earnings again quite intently. That's because if you start looking at the breakdown, let's just have a look at the Dow, for example. Here's your index percentage weighting, and the biggest company is reporting today. That's Boeing. 9.54% of the entire index. You've also got Visa reporting. If you know your stock names, Visa is number 12 on the list. So cumulatively, just those two companies alone is about 13% of the index. And both of those companies will be coming pre-market. So again, something to just definitely be aware of. From an earnings perspective then, going back to the calendar, this is definitely something I'd be monitoring, and really, as I was suggesting to some of the traders here yesterday, this is when you do your due diligence the day before. You know, if you're going to do this properly, in a professional manner, preparation is key to formulating cohesive, well-rounded strategies. Can't just be coming in the morning and going, oh, I'm going to make a decision. That's just not going to cut it in this market. And so, this is when I would, at 4:30, European cash close every day, I'd get the calendar up and I'd look ahead to the following day and start planning what companies are coming out and when, and what's their index weighting. All these types of questions. If you look at Europe, there's been a whole batch of earnings this morning. I mean, just having a look, Kering in France, they're up about 5%. Antofagasta, though, in London, opposite, down about 3. Air Liquide down about 1.2 in France. Shire, good gainer. There's been some individual specific news. Obviously, that Japanese firm looking to take them over, still elevating their share price. So it's kind of reversed course. And this is when you've got to move and be flexible in the way you approach each day as to reassessing conditions. If we turn the clock back 2 weeks ago, basically, absolutely no one really cared about individual, I'd say, was fretting over earnings because we were so panicked about this escalation of the geopolitics. Well, now that's gone, direction and focus has changed. And so accordingly, you need to change as well in terms of where you're looking for this kind of spark of activity. Okay, so hopefully that just gives you a bit of an overall assessment. The other thing, of course, which everyone's talking about in the press is the US 10-year. So just looking at T-notes here in the bottom right-hand corner, you can see that irrespective of the fall in equities, which saw losses ranging from about 1.4 to 2.1% from the S&P to the Nasdaq yesterday, actually T-notes are down. So rather than getting this kind of inverse relationship here and a kind of a panic sell-off in equities, what this really is yes, on a micro level, some of these corporate earnings aren't great. I mean, take Caterpillar, for example. That's that one stock we look at for forward-looking assessment of economic conditions, depending on how well that they've done geographically. And they actually stated in their guidance that Q1 of 2018 is going to be the highlight of the year. Everything from here is going to get worse. So, you know, other reasons for this sell-off. But then what's interesting here is, despite that, bonds haven't rallied. And that's because everyone's talking about this 10-year yield breach of 3%. So let's just have a quick look at that. And I quite like this graphic. It's just looking at the journey of the 10-year yield touching 3%. Don't forget, the reason why this is important is because it's the first time in 4 years. So just having a look, you got the Brexit vote. That was the record low. At that point was kind of the biggest uncertainty. Obviously, EU referendum result of Britain choosing to, or opting to leave Europe, was not expected at all by the market. And at that point, specifically at the end of June, we really didn't know what the future holds. So that was when bonds were at their highest point. But since then, obviously, Trump election, you can see it gave the US 10-year yield the biggest jolt to the upside. That's when everyone started buying into the Trump trade, Trumpflation, this idea that his fiscal push, government spending, various other things like corporate tax cuts in order to boost the US economy, in addition to the fairly accommodative still monetary policy environment, meant that the economy is going to start booming. And so hence that's probably the most violent upside move. Since then, we've continued to we've kind of consolidated, I guess, through the first part of 2017. But then, of course, Janet Yellen, now departed, she delivered. She said 3 rate hikes, she gave that. They've now executed several hikes, and the next rate hike is pretty much 100% priced in for June, with another one to follow thereafter. So with inflation concerns kind of getting elevated again, people looking at oil trading a $69, $70 handle, you know, inflation concerns are definitely back on the table, and consequently we are back up at 3%. What does this look like from a broader perspective? Well, this axis at the bottom takes us all the way back to what was a key double top test back in 2013, and this is, of course, is what people are watching, because a breach of that then could well open up some further upside. And if you're looking at this technically, 3.5% is kind of the next target, which would take us back to the 2010 highs. Some other interesting charts from this morning, just to quickly run through, that I saw that probably are worth mentioning, is the dollar. You know, we've been looking at the dollar. Trump obviously has been talking it down over the last 12, 18 months, trying to regain a bit of competitiveness for the US. But what's happening is, with this inflation focus and consequently this idea of policy tightening coming, the dollar's been rallying. And so what we've had here is the dollar index is back above its 100-day moving average, and it's actually not that far from the 200 DMA again. So certainly something to be aware of. And in the context of May becoming a bit of a toss-up of whether the Bank of England will pull the trigger now, given some dovish comments from Mark Carney and a fairly significant drop in core inflation in the UK, downside pressure has been pretty evident in cable. I've been surprised by it myself. I thought that actually cable, when it was up at a 144, I thought things were looking good. But what I think has been a bit of a surprise, certainly for me, has been how quickly this whole geopolitical situation and trade talk has just been moved off the table. And also, as well, seems like the market has priced in to a larger extent the fact that we're going to have a soft Brexit, and it looks more like it, as we're going to see shortly, that Theresa May's hands likely going to be forced on the EU customs union. But like I said, that's not having a positive effect on the pound, because I think that's already what's led to the rally that we saw a few weeks ago. So quite interesting to see how this is playing out on the dollar's kind of recovery at the moment. Other interesting ones are, you know, people will monitor these large companies. You know, Google for one, or Alphabet I should say, was a key trigger of that price activity and equity selling yesterday. And Apple breaks down. Shares test their 200-day moving average, getting close to near-term support, you can see from what we had previously. So that's another thing that I'll probably be watching later on today when the cash markets get open later. Semiconductor index, I think it's down about 7% in the last 5 days. Also falling towards its 200-day moving average. So these are kind of sub-indices that people watch, and definitely when all the chips are aligned and all the dominoes fall, this is when you start to get quite pronounced movements in the market. Okay, quick look at that. I did mention just then something about Theresa May, and I don't want to talk her down too much because Sam will get upset and he's about to come on the mic, and I want him to deliver a good rundown for you guys. But the main story that's come out overnight is about the European Union would be prepared to offer Britain a better trade deal than the one it gave Turkey if it decides to stay in the customs union after Brexit. And they said they would listen to the UK's views on trade policy, according to the EU official. However, you read the details, what it does mean, though, is that UK will not have any say in the trade deals that get done in regards to Europe sitting at that table to negotiate those trade deals for the single market. So I guess this is a little bit of a teaser, if you like, from Europe. They know politically that Theresa May is under some pressure. We had Liam Fox, the Foreign Secretary, yesterday talking, the Trade Minister for the UK yesterday, talking about the fact that he's now flipping, that he thinks it will be better to stay in. And obviously her conceding to that pressure and opting to stay in, which would be the opposite of the current stance which she's been plugging for the last 12 months or so since the election, that's going to be very, very destabilising for her future and the confidence within the Prime Minister, which could then start a whole trigger of different events. So again, I wouldn't be trading the pound on the back of this story, but it's a situation that's getting still developing at this point and worth monitoring. Alright, I'm not going to talk any more than that. I'm going to let Sam come on and review some of the charts. What I'll do, I know the API crude oil inventory numbers did come out last night and I've not touched upon them, so I'll pop them in the chat room so you have all the numbers to hand. But otherwise, have a good day and I'll catch you later on.
Hi guys, good morning. Let's have a quick look over. We'll start with equities here, and the euro, which is, just briefly dropped below the low we saw yesterday afternoon in the S1, and it's getting a bit choppy around there now. I'd keep an eye on the previous low of today that we made, sort of around 7 AM as the next sort of potential resistance point for this. We're just sort of going sideways now for that market. Obviously, key level to the downside going to be yesterday's low, which offered actually quite good support on what was the sort of the Asian session low beforehand. So quite an interesting level where the buyers have come in quite nicely in what has been a market that still has been trending down. And I was speaking with Charlie yesterday, and we're just running through some of the charts for the euro. And while the dollar was weakening, we still were of the firm belief that we wanted to continue this trend a bit higher up. So we were happy to see it come up, and then when it came to the level we wanted, Charlie took that on. I know he's just, I think he's still got a tiny bit of that trade left on. And while the pivot acted as quite good resistance, the area we wanted, and I think we put this in the chat yesterday or through the briefing, was using this area here. So it was late last night, but feel quite nicely on that. For the euro today, obviously we're keeping an eye on the pivot, although the pivot yesterday, where the pivot is today, the area yesterday was quite messy, so I wouldn't be too sure on that. So I'll be thinking about whether we can push down through S1 and get a test of those lows, or still really looking for this to come a bit higher. Ideally, I'll be looking at R1, but I don't see that happening anytime soon. So it would be sort of more of a wait and see approach, see what happens as well on that previous low that we had this morning, 122.52 for euro. For the pound, similar sort of story in that we pushed down and broke through the low that we made at sort of 7 AM. So again, keeping an eye on that. The pivot probably best left alone, I would suggest. Keeping an eye on yesterday's lows as well. If we can actually get a confirmed breakthrough there, then it sort of does open the door a bit more. Let me just put this on a 60-minute chart. Ideally, this is the trade I want. So similar for the euro, looking for that bit of retracement again to come up. So you've got the previous low that we had on Friday, and then the pullback and also the R1 still in a a nice sort of downtrending market. And if we were to get up to there today, you would expect a bit of profit taking as well. So that would be the ideal sort of trade I'd be looking for. The grand scheme of things, where we are trading at now for the pound, got to really be aware of the low that we made here on the 16th, and not far away from yesterday's low, and even below that the day before, the 13th. So quite interesting level of support for this market. And if we were to get down there, I would expect a decent bounce. Anzac Day in Australia, New Zealand, so volume for these markets, and we're about to go through for the Aussie, going to be a bit less than usual. I would like to see this retrace a bit higher before wanting to get in. We've had just now, the sort of, well, not just now, not too long ago, I should say, the sort of the classic off S1, which worked quite well. I'd be interested in it again, however, it's already worked, so that second test will just be a bit wary. But this market still in a nice sort of downtrend over the last few days. Ideally looking for this to retrace a bit higher before wanting to get in. I tweeted saying I would like the R1. I don't think we're going to get there at all, especially on a day like today. So it might well be that yesterday evening's low and the morning high that we had, 75.91 around here, could still be a nice trade opportunity. I also like the pivot. If we were to get there, I don't see it going any higher than that. But still looking for this dollar strength to continue, ideally on the retracements. One market that I'm not entirely sure on an entry point is the dollar yen. I think an opportunity could be obviously on the retracement back to the previous highs, or waiting for a confirmed break of the high that we had yesterday, and then looking to sort of ride that up. And this is the highest we've been for quite some time for the dollar yen. So we'll see what happens. We're not far away from yesterday's high, just stuck between that and the R1. So I'll be keeping an eye. Well, for now, really, it might be worth setting an alert on that to see if we can push on at all. Just out the corner of my eye, we'll come on to equities in the US in a bit, but for the FTSE, just pushing on. So equities, which were coming down quite strongly last night, FTSE sort of eventually joined the party, but with this weaker pound this morning, albeit mostly because of a stronger dollar as well, but FTSE benefiting, and we're just pushing on still this market. I keep an eye on the pivot. If we were to come back down and the previous highs, I still think that could be a decent area of support going forward for this market, having just broken through the previous low as well that we had yesterday, 73.97 on the CFD, another area of interest. The DAX this morning, its usual tricks, up down, keeping an eye on the pivot. Obviously this market can move very quickly around these sort of technical levels. If you put it onto a lower time frame, the 5 minute, you can see the area around the pivot could be, well, if you sort of had that first test this morning, definitely worth getting a bit of a trend line on from the lows that we had yesterday evening. Been quite well respected again late last night and then this morning, so I'll be bearing that in mind as well. We might even be able to get a bit of a trend line going up from the highs. I guess we've broken through that, but the low is definitely one to bear in mind if we are to get a continuation. S&P, let me put this back onto the 60 minute, you can see just the extent of that move to the downside, and obviously this now moves the pivots, S1s, etc., all quite far away. Going forward, I'll be keeping an eye on this previous level support. 1 second. If we were to get anywhere near that today, obviously the resistance of the high of the day and low of the day might be the best sort of opportunity here to see either continuation, so a break through the low, or if we can get above the high of the day, then maybe sentiment is just sort of starting to change. And as Ant mentioned about Apple's 200 day moving average, could that be an interesting level where people essentially look to buy the dip there and we drive price higher? Probably going to be the opportunity for that, or the continuation into the afternoon. I would probably want to leave it alone for now. I mean, we have just broken above the high that we had early in the sort of, what's that sort of time, 4 or 5 o'clock. So little intraday support level coming up at 26.33.5. But for me, I think better off to wait for a breaks of the high or the low going into the rest of the day. Similar sort of scenario for the Dow, as you see, and the Nasdaq. So those highs and lows pretty much the same across the board. Oil, which held initially quite well at the pivot, also started coming down yesterday. Let me just refresh this chart up a bit. You can see their first test of the pivot was quite good. We did push on and then eventually broke back down, and S1 didn't even really offer the greatest level of support for this market. Yesterday, or not yesterday, it's Monday's low, obviously key level support if we were to break through the low. And again, it's similar to equities in the fact that we're sort of stuck between the high and the low of the range, a lot smaller than obviously what it was yesterday. And it might be worth sort of treating it as if we can convincingly break the low. Yeah, maybe this sort of recent trend might continue. If we break the high, normal service resumes, kind of thing. Worth keeping an eye on dollar CAD here, which is just, as we speak, pushing above the high that we made yesterday. So this market, obviously with the dollar on the high of the day as well, just helping to push on. Let's have a quick look over the other dollar pairs to see euro below that S1, and pound just coming down a bit lower from where we had spoken to as well. Again, keeping an eye on T-notes for today. Another new low, S1 holding for now. The classic off the low from yesterday and the low of the morning, working quite nicely. And if this was to continue, could help drag down the Bund as well, which is obviously the lowest it's been for some time as well there, but just bouncing off its lower point. So keep an eye on the previous low of yesterday for that Bund. Any questions, as usual, please do get them in the chat. And obviously we'll be on the mic throughout the day. But if I don't speak to you, have a good trading day.